A couple of seconds. Okay, we are here, everybody. Thank you very much for waiting. It will be worth the wait, trust me. So this is our third and final session for day 4, Festival of Startups, and I'm joined by Piers Linney, and I'm also joined by James, Director at Festival of Enterprise. And thank you all for joining us. As I say, if you missed the first couple of sessions, we will be able to get replays up pretty soon. They're both really good. We had Stepan Galiev, who is Director of Investments at Dragon's Den, and then we had Stuart Chapman, who is the founder of Draper Esprit Venture Capital Fund as well. So segueing nicely into that, we're going to be talking to Piers. Before that, James is going to say a couple of words, so I'll hand over to James first of all.
Sure. Thanks, Alex. Hello, Piers. Pleasure to have you on again. Slightly different venue. Yeah.
There you go.
Well, this is having a proper setup. My camera is working from my laptop, but yeah, different venue this time. It's all virtual these days. But I just wanted to say, obviously say thank you for Piers for giving up his time to get on board and present today. I met Piers just over a year ago when we ran an event at NEC. It was like a lifetime ago. One of the first things I noticed when I met Piers is what a snappy dresser. We have the exact same jacket and the exact same shirt, so that's about as close as I've managed to get. Hopefully, some of his other skills will rub off. So I'm going to actually get down and start watching hashtag Startup tonight, which we'll talk about a bit later. So a couple of other things to say for Piers. Piers has been really, really important for Festival of Enterprise. When we first went into lockdown, we went straight into running virtual webinars, and Piers was the first person to respond to the call and came out and delivered a cracking session on C-bills at the time. And since then, Piers has gone on to be our most popular ever speaker. So no pressure there, mate. I only mentioned that today, but yeah. So so without any further ado, let's hand you over to the man. And thanks again, Piers.
Brilliant. Thanks, James. So yeah, those of you who are joining us for the first time at this week's Festival of Startups, we've got another whole week to go next week for you. Another 3 sessions tomorrow as well. But we've got a couple of options for you to interact with this webinar. So down in the bottom, you can see a bunch of buttons on the right-hand side. Chat button, live chat. You can comment, you can connect. You can put in your LinkedIn profile there to connect with people, ask a question. We've also got a tab below that called the questions tab. So if you've got any questions for us, pop them in there, and I will flag them up for Piers to answer. We've literally, today has been like a tidal wave of questions. It's been the most popular day by far. Haven't been able to answer all the questions in the hour sessions that we have. So do keep them coming. Been some really, really good questions in there today as well. So I'm your host, Alex Chisnell, Content Director here at the Festival of Startups. And I'm joined by Piers Linney, entrepreneur, non-executive director at British Business Bank, former Dragon's Den investor, banker, lawyer, Channel 4 secret millionaire, and chairman and co-founder of Atherton Bikes. I can see, is that the sweatshirt? Yeah, I knew it. I saw the A.
Yeah.
Hey, we're meant to have had a webinar yesterday by a friend of mine, John Auckland, who's expert in the crowdfunding space, was going to be talking about the Cedars and Crowdcube merger. But as we've got you on, I see Atherton has raised over £1 million crowdfunding. So how's that been going?
Probably going to tick up to 1.3 any minute, I think, because we had someone else that contacted us via Crowdcube. So that's been so I've been involved in. I mean, I don't know what this session what we're actually going to cover actually. So I mean, I can cover anything you want me to. I can answer any questions you want, from business to what's Deborah Meaden like, who sent me a brioche recipe yesterday. It's very nice of her. But so I've been involved in a crowdfunding on the periphery in many ways. So as an advisor, as a shareholder, but with Atherton Bikes, if you don't know it, go and have a look. AthertonBikes.com. This is a business we set up with the world champions. Amazingly, there's 3 of them, 3 siblings, and they've won 6 World Cups and 49 World Championships. We make 3D printed titanium and carbon mountain bikes, which means we can, we've got a much faster sort of development cycle. And we've got no stock almost. and they're extremely strong. So we decided to raise money. Right, we kind of bootstrapped it for 2 years, and we thought, let's raise some money from angels, and then we sort of moved that into Crowdcube then as well. So, I mean, it's been an interesting process. So I think what people are surprised by actually is that you don't just flip your presentation on some website, sit at home watching, The Mandalorian, and then the money starts flowing in. It doesn't quite work like that. I've been involved in IPOs as an advisor and done them myself, and it's a lot of hard work. And the key to success is clearly is having the right business, having some people want to invest in. It's investable. That's a term people often use. But then a lot of it, especially in crowdfunding, where you're talking to some sophisticated investors, but a lot of retail investors. Think our average, there's some big investments, but our average investments like under probably £500. Okay. So it's about your presentation and the PR and how you interact with people. It's about that video. And then behind the scenes, Crowdcube and Crowdcube is going to be seeded, assuming the merger happens. They do a lot of work on checking that what you say is fact is actually the case. So in an IPO, that's a very similar process. But there's also be prepared, like in any fundraising, I always say, is you don't expect the money to be out there. And there is a risk with these crowdfunding platforms where you don't hit your target, so you can't take the money off the table. So there's a real team effort involved, and it's been the whole Atherton's team has worked really hard on this. But do not underestimate the amount of work required, and plan ahead. I always say, we'll maybe talk about my course as well. I always say you've got to plan. So you have a business plan, but as part of that, if you need to raise money, you need a plan to raise finance. We've been working on this for probably 6 to 9 months actually, if you count all the thinking behind it.
Yeah, I mean, I've spoken to a number of people who've gone down the crowdfunding route, and they've all said to me it literally can become a full-time job. And like you say, you're looking at 6 to 12 months of hard work. How much out of interest did they manage to get investors teed up before they went live, and then those people were ready to kind of jump in?
So we had some people. I kind of did 3 phases. I always say that raising money, especially in young companies and startups, I talk about these concentric rings of it's your social capital almost. So you think about your family, friends, people that know you, they're investing in you. As you move outside, then it becomes friends of friends, colleagues. Your next door neighbor. They're like you, but they start looking at the business plan. They start moving to angels, and they want to believe in you, and they're going to back management, but they really are going to look at that business plan. And as you get into venture, then clearly the founders are very important, but they're going to do a huge amount of work and due diligence as well. So so our plan really was kind of the first 3 rings almost. Internally, we did people we know, friends and family, people who we know from the industry. That was the first kind of the first ring. Then we moved to angels, so we work with Angel Investment Network, Angel Invest Wales, because it's based in Wales, Development Bank Wales as well.
I didn't know it was based in Wales.
Yeah, we're based in the Dovey Valley in Wales. So there's angel syndicate matching fund as well, so we're having that conversation. And then as part of that, what the Athertons are really, and what crowdfunding is fantastic for, and the Athertons have a 15-year heritage in terms of their name, is to connect the investment opportunity and the product and the brand with people that are, some are fans, so they probably invest anyway, 50 quid, whatever it might be, to be involved. But people that ride bikes, basically. So that's who we kind of went out to first. And they soaked a lot of the investment, the shares and offer up. Then after that, we opened up to the general public. So that's more people that are on the platform and they're looking around. But we kind of went very much and focused on the industry and people that ride bikes initially. And that's where most of the money's come from.
Right, and is it in an overfunding stage now? Have you not got?
Yeah, we were overfunding, and it was like it was like a Spice Girls concert. I think we were overfunding in like 2 hours. I think so. We're 200%, and then you get into the conversation then about how much is right, how much because there comes a point where you can use excess money. It's something you need to think about, the dilution, because equity is gold dust if you're starting a business. But there comes a point where you don't want to be raising more money than you actually need. Now, something we might talk about is, you've got COVID, you've got a recession. That's probably most likely going to become a depression. And that's something I was making a couple of short videos for Paul a minute ago about, about COVID strategy, really. And you've got to think about, it's not just about making those difficult decisions today about, people and your cost base, and it's not about thinking about going digital and how do you automate things and access and serve customers in new ways. You've got to start thinking about there's the COVID, vaccine won't be available, to the masses until probably middle of next year.
Yeah.
Then you've got maybe a 2-year depression. So how's that going to affect your business? So a point I'm getting to in a very laboured way is that when we're raising money, we were thinking about, well, actually, what is the world going to look like in the next 1 or 2 years? I've been caught out as an entrepreneur. I've been cute about not raising money, building value, raising more money, building value, raising more money, and that's worked very well. And I've been caught out, quite expensive at a couple of occasions, where I thought, well, I'm not going to raise the money now, because then, and this is my first company actually, was where I raised external money, was a .com, and that was, well, we won't raise a lot of money now. I walked out of Credit Suisse First Boston, the city, in 1999. I told everyone I was leaving, and I raised £700,000 walking out of the building. That's how the world's changed. So at the time, it's kind of like, well, let's not take all of that. Let's build some value, raise more money. Within 4 months, it was a .com crash. You couldn't raise money if you were giving gold bars away. So you've got to be slightly careful about getting that strategy right. So part of the conversation with us has been, do we take more off the table now, because the future fundraising, the opportunity to raise money is potentially not as clear as it might have been. So we're having that. We'll be having that debate in a board meeting tomorrow, I'm sure.
Yeah, no, that's a really good point, actually. And look, last time we spoke, or spoke a number of times, obviously, but right at the beginning of lockdown 1.0, and we were talking about the different responses that were being put out there to help entrepreneurs, to help business owners. We're talking CBILS, we're talking bounce back loans. How do you view the funding landscape now, kind of 7-8 months in? And have you got any insights as to what might be coming up, given your role at the British Business Bank?
So it's a really complicated picture, and it depends on where your business is. Are you a startup? Are you growing a business? Are you profitable? Are you intending to be profitable in the near future? Or is it some kind of quite a large upfront investment because of maybe it's technology or software? Now, for those of you who don't know, I'm on the board of British Business Bank, and British Business Bank is the government development bank. It's become much better known during 2020 because British Business Bank is the organisation. It's government owned, so it's the government, but it's an organisation that's actually put together, constructed and delivered the bounce back loans, CBILS, CL bills, future fund, all of those schemes. So you can imagine that I've been sitting in quite a few additional board meetings over the course of the year. And the numbers, I'm not going to try and get them exactly right, because I'll get it wrong because they keep moving. But British Business Bank was, probably facilitated, I see different numbers, but call it 10 billion pre-COVID, depending on when you start measuring it. Now it's sort of 8, it's going to hit 80 probably. So the amount of money that's gone into a lot of that is, B-bills, and there's, you can have your views on how that was done, but in my view, I think that the government acted quickly, and British Business Bank and the people there. I'm a non-exec, so I can't take any credit for the hard work, to be quite frank. But the people there are mission driven. They've worked really, really hard to get this money into the market. Having the idea about a future fund and actually creating it and going through all the governance and the risk analysis and putting these things together and finding the delivery partners and putting the money to work in that short space of time is quite an amazing feat. So that was fascinating to see. So there's money out there. These schemes they've been extended, as you're probably aware.
Yeah.
But in some cases, you may have had a bounce back loan, you burnt through it, or you weren't eligible, you won't be able to get one. There's been issues there, with different banks. Business Bank doesn't hand the loans out, doesn't deliver the loans. Banks do, or delivery partners. It just guarantees it essentially. So you can't go and knock on the door and ask for money. But what's amazed me is, not amazed, but what's been positive is over the course of 2020, I've been, as you know, I've been beavering around a new business, which I'll be telling you all about in due course. And I've been working with a friend of mine who's raising money for a space business as well. Sen, if you have a look at that, he's putting satellites into space to create a real-time view of Earth, which will, as you can imagine, completely change how we're going to view Earth, because it'd be like, imagine Google Maps, but the satellite view in real time. So I've been working on that. We look at Atherton bikes. And what's amazed me is the amount of money out there that people are still willing to invest in young, small and startup companies. I've been working very closely with talking to people like Crowdcube, the various angel networks. I've been probably around 5 of them during the course of the year, and the money's out there. The people are willing to invest. There is excess capital. People still believe in the EAS and the SEIS tax schemes are still very attractive. So in terms of if you look at the macro, and I know when you're trying to start a business and you can't raise £5,000 or £500,000, it can be incredibly frustrating. Trust me, I've been through that this year myself. It can be really frustrating, but the money is out there. It's a question of finding the right home for it, and that's where I work with companies. Atherton Bikes, for example, my job really is about structure, strategy, putting the business together, and the financing as well. I don't pretend to be able to design mountain bikes, so it's about picking your battles and getting the people that understand how to go about raising money, having a plan, and make sure you're not trying to shove a round peg into a square hole, because then no matter how hard you try, you are completely wasting your time. Sometimes you've got to change the peg, sometimes you've got to change the hole, sometimes you've got to think about doing something completely different. But the capital's out there. I don't think there's any shortage of interest in young companies and startups. There's no shortage of ambition, that's for sure.
Yeah.
It's a question of connecting the two.
Yeah, we're talking earlier, it seems like, you probably got better stats than I have, but like a record number of businesses being started this year, despite the fact that we're in, a pandemic. Clearly people, maybe one, seeing an opportunity, but two, the amount of redundancies there've been, people maybe having, some money to start a business, or looking at it as hey, things can't get any worse. So if I've wanted to start that business idea, now's as good a time as any. For you, and it's one of the options offered by the British Business Bank. We're talking startup loans yesterday. Do you still think that's a good first port of call for those who are like really super early stage, which we had a number of people on yesterday?
So British Business Bank did some, I've got to get it in here, did some fantastic research, supported it on diversity. And bear with me, I'll get from diversity to your question. But so what this research showed was that if you're a sort of a BAME founder, or you find it hard basically to succeed, and the British Business Bank has been sort of at the forefront of that. Now, one of the big issues is that, and I'm talking about people that come from difficult socioeconomic backgrounds, no matter what colour you are, or if you come from an ethnic background, it could be hard. But one of the issues was, in terms of success, is a lack of social capital. And social capital is your networks, your contacts, your people, your friends, where you grew up, what school you went to, your school tie, what you did for a living, how much money have you got in the bank. It's quite intangible, but it's all those things that they just make life easier. And if you probably have that, but you're not aware of it, and that's privilege, and nothing wrong with that. It's just the way it is. And one of the issues is financial capital, access to financial capital, whether it's your savings, going back to my concentric rings, your family, your friends, your colleagues, and those kind of groupings. That again is inextricably linked to where you start in life, and where you come from, your network. So those two are very much linked. Now, how I connect that to startup loans is that if you don't have that initial, £500, £5,000, and Alex, you've been involved in delivering startup loans, and how many businesses I meet, and I said, well, how did you start out? Oh, I had startup loans money. Some don't work out, but some are quite, they're real businesses now with customers and revenues and profits. And the point is that what startup loans, so to change access to capital and create a level playing field for all of us, no matter where you come from, what you look like, what God you believe in, the key is to equalize access to social and financial capital. So you've got to synthesize it. You're not going to wait generations and generations for people to pass down their house to their kids. So you've got to synthesize it. And what startup loans does is synthesize in some ways as much as possible, and with government support, because typically it's beyond the risk parameters of an institutional investment fund. What it does is synthesize access to that kind of initial family capital, even if you've got a bit of a dodgy credit history.
Yes, correct.
That makes a massive difference, because without that, it's very, very difficult to start a business, even if it's 500 quid or 5,000. And every business at some point, no matter what you do, if you're a corner shop and you need an overdraft to buy some new stock in a difficult month, you need access to capital at some point. Now, British Business Bank, in COVID, the schemes have been very much government backed because they needed to be. Startup loans is government backed, but I think it is. I've got to. This is my personal hat now. I'll take off my British Business Bank hat, but my personal hat on. My personal view is that the government should really get behind a scheme like startup loans. I think we're changing the branding now as well, and look at it as a long-term solution because, which means these long-term support. And work out where can you bring that scheme into the for-profit private sector without that government sort of underwriting essentially. Where can you bring that into how do you sort of overlap into the private sector? Where does it stop working, and what can you do to extend its reach? So I think it's really important, which is what I was trying to say, really.
No, and when you're talking about success stories from that, I remember we did that event up in Manchester with Jamal Easel, who founded Change Please. £25,000 loan, and then his coffee's being served on Virgin Atlantic airplanes, Virgin trains, and now launching in America and in Australia. So there are some great success stories from that. Sharina Shiv, who I know has just asked a question which kind of follows on from what you just said, actually, so maybe you can add a bit of context to that, who says, what advice do you have for female BAME founders trying to raise finance?
Well, let me give you some more depressing statistics first. Then we'll talk about that. So British Business Bank, basically, I liken this to now let's talk about diversity a bit. I don't want to drift off and talk about, it doesn't relate to me, because it actually does, because diversity relates to all of us, because some of us come from, you can be white and working class like my dad, and that can be a difficult place to come from. But the point was, there was some research done by another outfit called Extend Ventures, and they, interestingly enough, if you like technology, they use machine learning and computer vision. So what they did, they sort of trained an algorithm to look at, say, pictures of people and make assumptions about their ethnicity, as a human would do. We've all got our own bias, so that's sort of train that in. And they basically looked at websites of companies that have raised venture capital money, looked at companies' house, and it matched up the deals with the people and took a look at them and put them into a sort of ethnic box. And the really bad news is that in the last 10 years, one black woman has raised institutional Series A or Series B, and that Series A, Series B tends to be when your venture-backed company is about to start scaling, so you start to put some real money into it. One black woman's raised Series A or Series B and venture capital, and they're only 0.26% of venture capital. This is not angels, this is venture capital funds, goes to BAME founders. So that's terrible.
It's insane.
The only good news is, and I'm sure if you did the research on people that come from a difficult socioeconomic, I hate these terms, but working background, it'd be just difficult because you haven't got that social capital. When you look at a VC website, it says to you, we prefer you to contact us through a warm introduction. I mean, you may as well build a 50-foot high concrete wall with anti-climb paint on it, because most people have no way of working out. I sometimes struggle to get warm introductions to people I want to talk to. So you've got to, and the point I'm getting to, again, in a very laboured way, but that's how I tend to operate, is this. Now we've got the stats, we can start having the conversation, can't we? And start working about how do we change it. So if you're a black woman, or a woman with any, or an Asian woman, or a woman from a white working class background, where you've got some kind of disadvantage in terms of the way that the numbers show that is the case, whether you like it or not, it is hard, and you have to work a lot harder, and there's no nice way of saying that. I use an analogy of a race where you turn up at your 100 meters race, you've got all your kit, all your work, you've got the same physical attributes, you're just as good, and you're told then to start 20 meters back if you come from one of these difficult backgrounds, or from ethnicity wise or socioeconomic wise. If you're a woman, you're starting 50 meters back, and you're like, well, why the hell's that? Because you've got a longer journey to success, but how you measure that, usually. And then you look down your lane, you realize you've got hurdles no one else has. And when you start running that race thinking, I'm going to do this, you go out chasing down that lane, and you realize that half the hurdles are invisible. That's a race that's your race you're sort of you're running. So there's no point in getting down about that and putting a duvet over your head and sticking your head in the sand. That's just the way it is. So we collectively need to bring about change. But if you're here today in that race, then you just got to work a lot harder.
Yeah. And you, I know you've got a fund. Any further updates on that? You've been working on that over the last few months, I know.
I've been working on quite a few things. Some
You have.
just like anything else, some work, some don't. So the things I've been focused on are, so my passion, and I don't just say this willy-nilly. My passion is small businesses, it's entrepreneurs, it's connecting ambition and talent with opportunity and capital. That's why I love being a non-exec director of British Business Bank. You feel as though you're actually doing something. And a couple of things I've been looking at. So one is a business that I want to start, which supports small, medium-sized businesses and startups as well, in that kind of realm. I've been involved in some startups myself, some different vintages. So some are sort of just about going. I was kind of took a bit of time out for a few years, so I've got to plant some more seeds now, so I can sort of reap the rewards down the line.
Time to do it, yeah.
I've got a sort of portfolio as well, but that's different vintages as well. So I've been quite focused, been quite selfish the last 12 months, though, because focus on myself and what is it I want to do and what is it I can do that it kind of meshes together my interest in business. Always been interested in business of all sorts, small companies, entrepreneurs, startups, technology, communications, and I also was doing a competition about. I made a course over last year because I was sort of sitting around thinking, how do I do this to scale? Because I get asked advice all the time.
It takes time, though, doesn't it? Put a course together.
Yeah, I mean, people say, "Oh, put a course together and put it on the internet, and you'll make loads of money."
Yeah,
I nearly killed me.
Likewise. It's tough, but and everybody who signed up to attend this week and next week do get 3 free modules of your course as well. So you need to be making sure that you've got hold of those. So is Roblox what you've been working on? Is that your like main focus day to day the last 4, 5, 6 months? Would you say?
Well, Roblox is the kids' game, so I played that with my daughter. But I haven't quite decided on the name yet. So I think it might be something like that. But
yeah,
I'm kind of in the. I mean, just a bit of advice for you if you're watching this year and you're an entrepreneur. So I started out, and people who know me will know that I was quite right. I've got an idea. We're going to do this. I was kind of lean and agile, and I was quite willing to learn, test, and build. But I still kind of thought I had all the answers sometimes, and I've learned the hard way that these new businesses, especially the ones I'm sort of potentially going to be leading, they've been built around a huge amount of research. And this is again in my course was about a huge amount of research and talking to a lot of people. Ideally, people they may not understand your take on that industry, but they certainly understand the industry. So I like it. What I'm doing more like the challenger banks. What they've done in banking. I'm kind of doing that in this space. But by talking to people that have started the banks or started fintechs, I learned a lot about strategy and how you go about it, even if it's a different sector. So I very much now are focused on learning, and my businesses have evolved very, very quickly from these kind of conversations. And it's really important you do that. And it doesn't matter who they are. You'd be surprised. My mum and dad, my dad, he worked in management in a company for many years. Mum worked in NHS, and she had a business. And I've sat down with my parents over Sunday lunch, and I'm telling them what I'm up to. And I said, "Oh, hang on a minute, that doesn't make any sense. What about this or what about that?" And I'm kind of like, eat your jerk chicken, Mum. What do you know about business, sort of thing. Anyway, about 2 months later, something will blow up, and I'll be back at having lunch, Sunday dinner with my parents, looking at me saying, "We told you."
Oh God, it never ends then.
That's because, interestingly, they might not know the business, but they understand me, and they've got this life experience where, especially my dad, he speaks different language. It's just about a cultural sort of disconnect with some people I was working with, and he could see it, and I couldn't. And so listen to everybody. It haven't got to be me or some mentor. It can be your friends, your family, your colleagues. But go out there, get outside. I know it's quite hard these days, but get outside insofar as you can and talk to people.
And who do you look for if you're looking for a mentor for help? Where do you kind of look?
So people ask me a lot. I've never really had a mentor. No, I've always struggled with that. So going back to social capital, When I said to I grew up in a neighbourhood in Lancashire where there were lots of entrepreneurs. People had businesses, but they were joiners, brickies, owned a quarry, and they were sort of manual, physical capital was what they had really. The entrepreneurial ethic. But I've had mentors. I mean, I had my chairman was Sir Ken Alyssa, who's been great. He's a Lord Lieutenant of Greater London. He's on the board of Thomson Reuters. So he's been someone I've learned a lot from. But I've never really had a formal mentor. So in my new businesses, for example, I've just reached out, so for example, and my chairman of my new company, I've known him for probably 2 months because I reached out into the industry. I found someone that kind of understood what I was talking about. I found someone that I realized would challenge me and hold my feet to the fire as well. It wasn't going to be a yes man for the non-exec fee. He's investing his own money as well. So I'm actually working with people that I haven't worked with before. And I think, again, where I've learned, not had mentors, but I've always worked with people that are better than me and that I've learned from. And that's what I enjoyed. I think that's what you have to do. If you look around you and you're better than everyone that's working for you or with you, there's something very wrong.
Agreed. Sharina says, thank you for answering the question. That's good. Kay Dahl says, hi, it's been said that a lower salary keeps founders focused on making their equity work. Do you believe that the lower the salary of the founder, CEO, the greater the chance of success that the startup has?
Yeah, well, I've had that conversation many times myself, including quite recently. So I think that depends on your personal circumstances and what you're doing. So, if you've got to be realistic, if you're starting a company where you want to raise, I don't know, let's pick a number, £10,000. Let's make it £50,000. And you can say £50,000 will get me to year 3 and then hopefully profitable. And then people look at your financials and you're paying yourself £50,000 a year. That's not going to work. You're going to get laughed at. So you've got to find that balance between, and it depends if you've got your own money, putting money into the game. You've got that balance about do you put it in, do you take it out. Tax plays a big factor in this as well in terms of tax efficiency. How much of the company do you own? Can you get ASS? So think about tax is one. But the point is that balance between commitment, equity risk, which is what equity is really about. If you're not taking risk, you shouldn't really be getting equity, to be quite frank. And the less risk you take, the less equity you probably end up getting. That's that conversation founders always need to have. We all sat in a room saying, well, who gets what shares? So you've got to really think about who's got skin in the game, how much skin are you putting into the game. But I think the big factor is this: is what do you need to live on?
Yeah.
I always say to entrepreneurs, especially young entrepreneurs, there's no point in you saying, well, I need 30 grand a year just to live on. Otherwise, I won't be able to relax and build a business. And they can see you've got some car outside that you can't afford. You're wearing some watch that you can't afford. I wear Fitbit, so I'm all right. I can show it. You've got a watch you can't afford, some 85-inch TV that you can't afford, and you need £20,000 a year before you turn the light on to keep up with the Joneses. So the point is in business, especially when you're starting out, wind down your costs. And I don't mean your fixed business costs. I mean your personal costs as well. I've had extravagances in my life, boats and cars and things like that. But I don't tend to live a particularly day-to-day extravagant life, to be honest with you. If I make some money, I tend to go a bit mad. If I lose some money, I tend to wind it back in. So I think you've got to think about what do you need to be comfortable and what realistically does that mean in terms of what you're really spending money on. Then you can go back, is the point I'm getting to, and say, well, actually, if I really wind down everything I can just about survive on this. Therefore, that's what I kind of need to earn. If your savings don't cover it, you've got to be very upfront with your backers or investors about what that looks like. And the more risk and skin you put into that game, the more time they're probably going to have for you.
So
in the old days, before tech, I remember that, I'm old enough. When I was training as a VC lawyer, most venture capital deals were management buyouts. And the fund would say, right, we'll support you to buy out your boss, buy the business out. You're going to put your house up. You've got to remortgage your house and put enough money. It'd be extremely painful if it goes wrong. That's what it used to be like. And now it isn't. Equity sometimes equity's free. So
no trip to Ibiza coming up then?
No, I had one planned, which I think was wishful thinking. It got canned very quickly. I got rid of my boat. So,
Can't sail there then. Taz, who's a partner in MN Venture Partner, says, how do you personally look at potential investments? Did you have existing relationships with all of the recent people you've invested in, e.g. Atherton, SEN, etc.?
no, so I've made money throughout the years and lost money as well, doing things that I thought I could make money in, which was sometimes I've always been interested in the dynamic of business, just the process basically. So yeah, I can make widgets and find it fascinating, quite frank. But increasingly now, I tend to do things that I really find interesting or enjoy. I got to be careful using the word passionate. I'm not always passionate, but it's something I'm actually got real interest in. And then the key to me is work with people I actually want to work with. So things to me come in from all directions. Things I've started more recently have ticked those two boxes. So Atherton, for example, the Athertons, which is G, Dan and Rachel, they knew I like riding bikes, probably from social media or in the press, or we have some mutual friends, just random ones. And they needed some help putting a business together. So I literally got a DM from G Atherton saying, Piers, can we talk? And I thought, what the hell does G Atherton want to talk to me about? And we got into a room and I kind of said, right, I can see the technology guys who are very bright, they're kind of geniuses from aerospace and engineering. I can see you've got the brand and the following and I can put in the structure and the business and the strategy. You put those three things together, I can see that there was a business. But typically, that's what I'm looked at now. Now, generally, that's not a tent work. If you just do what you like, you might limit your sort of portfolio. So if you're looking at across the board, really, it's been more of a portfolio. But I tend to do things that, and also I think what I found over the years is that I did a podcast, you probably know, with NatWest Bank.
Yes.
Was it last year now? God, was it this year or last year? I can't remember now.
No. Last year it was.
I interviewed a guy called Julien, who was one of the founders of Made.com. And he was saying to me, well, what are you doing now? And I was kind of mumbling a bit, like, oh, well, a bit of this, bit of that. I'm not sure. I'm not looking at this, looking at that. And I was sort of saying, I'm looking at markets to disrupt, where's a tired market? There aren't that many left now, but they are there. What's it? And he said to me, hey, yeah. He said, I said, well, how did you get into Made? Because I think he was a VC actually. He said, well, I was working in a venture capital fund, these kind of investments, and I kind of stepped into it. We ended up starting Made. And I said, all right. He said, my view is do what you know. And that kind of stuck with me, actually.
Yeah.
Certain things that I know. And there's certain things that I know, I'll probably look back. Before that, I probably thought, no, they're not that interesting. But I look at it in a new light. And I read the book Blue Ocean Strategy as well, which is quite interesting.
Yeah.
And that's about looking at things in, Richard Branson's probably the best example of Blue Ocean Strategy, whether it's, most things he's done, they already existed, to be quite frank. He just did it better and created new experience for the customer. So Blue Ocean Strategy and do things because essentially you've got the networks, you've got some experience, you can look at it a different way and understand it, and you've got that kind of capital almost sort of built into the opportunity. And the key thing is it's a path of least resistance, isn't it?
Yeah.
So when you're 25, it's different. You go for it. It's my ripe old age now. I'm nearing 50. I haven't got time for that. I need a path of least resistance.
Quickest way to make the money. So we've talked a lot today about pitching, given that we've had VC founder on and Dragon's Den investment director on. Question from Joanna Blacker, founder of Jacoco, who has asked, what does Piers expect to see in a pitch deck?
Yeah, it's funny, interesting, because I've written pitch decks recently. One with Atherton, and I've done one in my business recently. I look at it, I think, is it actually any good? And you get feedback, and I think you can go out there and find very quickly what's expected in a business plan. So it's a bit about the size of the prize, the opportunity, the problem you're solving, the team, the market, the go-to-market. Now, a lot of these things get skewed though by tech. So sometimes a presentation for somebody, I did a thing recently with Simply Business Insurers, a competition where you could win 10 grand. And the winner actually was a company where she's based around wool. So there's lots of these small wool farmers that don't really know what to do with it. They have sheep, they don't know what to do with the wool. And she's basically collecting this wool and using it in innovative ways. And she won. Now, her pitch is going to look very different to someone that's, trying to be the next Airbnb. So the point is, you got to tick the basic boxes. But when you're a very small company, the key really is to get across. Get across. I hate saying what problem you're solving because that's quite techy. Get across what value you're adding for your target customer. And you might be solving a problem, might be making something cheaper, better, faster. It's not always a problem, but what value are you adding? A lot about you, the team. People tend to invest in you and tell a story. There's a beginning, there's a middle, and there's an end. And if you don't have all the skills to deliver on that story, then you've got to be very upfront about where you're going to go and get them. I always say that, and I don't know where I got this from, so I don't think I made this up, but in some young company, it's the passion, the skill, and the market. If you haven't got passion, it's a job. If you haven't got the skill, it's probably not going to work, let's face it, and that's what people are looking for. And if it isn't a market, or the market's not big enough, it may be not big enough to take on investment, but it hasn't really got a market, it's a hobby. So make sure you don't fall into those traps. A lot of entrepreneurs say to me, they've got like a community interest company, and I say, well, why is it a kick? And they're like, oh, well, I thought it'd be easy to raise the money. Well, hang on, you completely mixed up.
Yeah, I've heard that a few times. Yeah.
It's not the case, raising money. If you think raising money for charity is easy, go and talk to someone who runs a charity.
Yeah.
And also that can stop like that, and it's over, and the lights are out, and there's no other alternatives. So think about that as well in terms of structure. A lot of people they mix up the fact they want to do some good in the world with making money. You can do both. Look at people like Bill Gates.
Indeed. So I've got a ridiculous amount of questions to get through. What I'll probably mention at this point as well is that for those of you who are literally looking for a solution from startup to scale up, and you want a little bit of hand holding, someone who's been there, done it, we have got access to Piers's course that we mentioned earlier for £198 instead of $599 if you go to Festival of Enterprise.
I think you're also giving away an intro for free, which is like about probably three modules worth, probably 10
Correct.
or 11 class. So if you go and look at that, and that's something which, I do charge for it because it took me probably 9 months to make. And I think the value in there is that you get something wrong or you need to write a legal letter, you've kind of got your money back very quickly. Yeah. That is literally having 200 coffees with me down at Starbucks that ask me questions about how you build a business. Yeah.
So go to the homepage for that, everybody, to get that, and we'll post some links up as well whilst we're on here. OJ asks, what are your views on scaling a business via licensing of the brand's name or model as opposed to consignment?
Yeah, so I get a lot of people that approach me and they've got something which is pretty clever, and they say, do I build this business myself or do I try and license it? Now, either can be very, very difficult to do. I think often, depending on your, again, going back to your skill set, your access to capital, expertise, your ability to execute, there's so many cases where someone who's very good technically or a very good idea, they couldn't run a bath, to be quite frank. So you either need to be really honest about you and your capabilities and the team and what it's going to take to actually really go to market and create a product, which involves manufacturing, or whether you license it. Now, the thing I always miss is that they're not mutually exclusive. You can have a dual track, can't you? So you might go ahead with licensing first, because what that's actually going to tell you to some extent is there a market for this product? Because if there is a market for the product, there's going to be more interest in licensing it. So if you find that there's no interest whatsoever, then that might be telling you something. It might be telling you that the market doesn't get your product and it's going to disrupt them. So you've got to be careful about that. But they are very, very different paths. And you need to think and seek advice, especially on licensing, about what that looks like and the control you have over it. And because you might find that very quickly someone's run off with your IP, and it's all right protecting your IP, it's all right getting patents and trademarks, that's great, and you should if you can afford to do that, but they only really work if you can afford to enforce them. So my view is, and we often talk about it, don't we, Alex, is that there's a business in everybody. I think we're all going to be in business of some sort within a generation.
Yeah.
If the organisations are going to hire people, look at Fiverr and websites like that, where you
freelancer, all of those.
Freelancer, the gig economy, 0-hour contracts. I don't care if you're a brain surgeon, a lawyer, an entrepreneur. It's coming for us all. So my view is, and you look at the COVID, the pandemic. You could have had a fantastic business that's been going on for 100 years. It's over. There were these shocks that are coming, and more of them, where your destiny is better in your hands. And whether you've got an idea and maybe you've got a job and you've got an idea, it's easy to license it. You don't want to take the risk of leaving. But I don't like calling it side hustles. Yeah, everyone should try to do something where they can see where they can add value for a particular kind of customer, and just try it. Even if you never end up in business, you will learn something that you will take back into your employed life. Trust me.
100% agree with you on that one. Any tips for, this is from Catherine Bishop, bid writer and proposal consultant for Clean Lines Consulting. Do you have any tips for small service-based startups on how to convince new clients to use your service, particularly in an uncertain period like this?
Yeah, it's interesting that this is I've experienced all these things. So the key with service businesses is the old testimonial, really. It's the first two customers, isn't it? And there's a danger there, and I fall into this trap personally. One is to drop your proverbial pants on price if you wear pants, which it might get you through the door. It might get you that first testimony, that reference customer. That's what I'm talking about now. But really, have you really tested your business case? You might want to offer a discount or a better service wrap or something. But the key is to make sure your service is as good as it can be. It's differentiated like any other product. Otherwise, why the hell are they going to talk to you? But then work really, really hard to find a customer that you can almost work with. You're going to give them a discount. You're going to add some more value for them, but in a way in which you're actually testing your business case. Because otherwise, all you're doing is getting a reference customer because you gave it away for free. You'll never get another customer because you're never going to learn that your product's not particularly good. Actually, it's just that when the price is nothing, its utility is above that, which is pretty. It's going to be pretty bad if it isn't, the guy frank. So the utility is above that zero pricing, which means that they'll always consume it. And if you ever need basic, if you go into business, read a basic book in economics, you'll learn a lot from it. But a lot of people they don't realize some stuff is really quite simple. Things like utility and even supply and demand, or the price elasticity of demand, all these kind of things. But try and find a customer that will work with you. They'll get a deal, but you're going to test your business case.
Yeah, no, I like that. Let's break up the questions here with Chris O'Hare from Hair Digital. Piers, who's your favourite dragon?
The dragon I know best is, I haven't spoken to her for a while actually. I do on Instagram now and then on social media, is Kelly, because we had the same.
You went the same.
We were there for the same time actually. I was talking to Deborah the other day about brioche on Twitter. So we see, but they're busy people, and we were thrown together in a room for 8-10 weeks of my life, and you're there if you wanted to have a conversation with Duncan. Will speak to you now and then, but he's enjoying life. So
yeah, he looks like he's enjoying life, doesn't he?
Yeah, keep in touch with them.
On his Instagram.
Yeah, you want to keep in touch with them, but Kelly's the one I'd say I know the best.
Thank you. How much time? How long have you got, Piers? Because I got a load of questions.
I'm here until my 50p runs out. That internet meter. I'm all right.
Okay, cool. Okay, OJ, any tips on how to get department stores to stock my range of products? I'm a fashion entrepreneur. Brand name is Dear Curves. I'll get the brand name in there for you. Yeah. OJ, no worries.
Don't worry about department stores. That's quite an easy one.
It is at the moment, isn't it? Yeah.
At the moment, they're not much use to you.
No.
I don't think going forward they're much use to you. I think that it's all about being glib about it. The traditional distribution channels are there for a reason. If you're trying to get a food product in front of customers, it's going to be nice to have it sitting on the shelves of all the multiple. Let's face it, there's no two ways about that. But you look at the high street, it is struggling. I could sit here and tell you that I think that's going to turn around. I think that's a long-term trend. That what the high street is will change. I think that if you're selling the average product to the average person, the average price, the Amazons of the world will kill you eventually. If your product is differentiated and you have a particular audience, the beauty of the internet now and access to customers anywhere in the world is that a niche, what used to be, going back to my three, the passion, the skill, and the market, what used to be a niche, there wasn't really a market because you can only sell it in the local community. That's now a market because you can sell it globally. So that's changed. So I personally, if you possibly can, if you're in fashion, you have a particular view of who your customers are and who will buy your stuff. What you need to build is a brand, probably a personal brand around that. And people always say, "Oh, go and sell on social media." We know that's hard. We know that can be increasingly expensive. But think about how you build an audience and build it around your content marketing, really.
Yeah.
And talking about it and who you are as opposed to the product. Now, then what you will find is that if there is traction, it becomes a lot easier to sell it into the traditional distribution channels because they basically, if you think about it, they have shelf space, which costs them money, rent rates, people, lighting, all that stuff, and they've got to put something on it that maximizes their profit. So it's about risk management. So if you can show them that I've got some traction over here, if you put it on that shelf, it's likely that stock will turn. They're more likely to buy it off you. Say in the music industry, a lot of talent's found now, are singing on TikTok or YouTube because it reduces their risk, their investment risk.
Ivy, Piers just dropped you a message on LinkedIn. Great to hear you're passionate about disruptors of tired markets. Okay, thank you, Ivy.
Sounds like another investment pitch.
Right.
I do actually read my LinkedIn messages. So take me time. I do go through them.
Let's have a quick look. Got loads of questions. Probably got that in your course, actually. Tim Pelosi asking, can you recommend any templates will allow to draw a shareholder agreement for investors?
There's actually quite a few of those on the internet. There's some in the US as well. They've tried to, I've got some links to that, but there's quite a few. It might be American, I think, but there's lots of examples now of basic documentation for startups. But a shareholder agreement essentially, now I'm not giving legal advice now, but a shareholder agreement essentially is, you've got your constitution in the UK at least, your article of association, but a shareholder agreement really is about who owns what, who's putting what in, and what are they getting for it, and what are your rights, things like consent rights, veto rights, rights to have people on the board. These are things that are in a contract between all the shareholders, the founders, and the company itself. And the point about shareholder agreements is that I meet people all the time that will say, I've just raised £500,000 at a $5 million valuation as a new company. Aren't I clever? And I'm like, right, okay, who's it from? Well, it was from this person, and what's the structure? Well, it's kind of going in mostly as debt. And if I don't hit this EBITDA profitability cash flow target in year 3, then there's a penalty clause and it kicks in. And they can convert at a discount, and there's anti-dilution rights, and I've got to get their consent to raise any more debt or any more equity. I mean, you're just giving your company away.
Yeah, exactly.
You have no negotiation chips anymore if you ever need to raise a penny, for example. So the small print, you might give up for good reason. You think 10% of your company, and find that actually you've given control up. So my advice is, yes, there are templates on the internet, but get a lawyer.
Good advice. Edwin from Mr. Lad Media says, how easy was it working with other Dragon on investments on the show? Did any of the joint ventures you invested in with any of the other Dragons work out?
I did 2. Was it 2? 2 with Kelly, I think. Can't remember now. But we got out of them, so we kind of got our money back, which sometimes for investments is a good result. Yeah. I think there's 2, at least one. One was Skinny Tan, actually. Remember the tanning solution that's supposed to make you skinnier? So there were a few issues with that, clearly, in terms of trading standards. But I think they've done quite well. They've gone on to do great things, and we sold it to a company that was in that sector and wanted to grow a portfolio of products, and they've got off and done their thing.
Nice. Andy Frankson from Target Student asks, hi Piers, do you have any pearls of wisdom for a B2B sales strategy for a young disruptive advertising agency?
Yeah. So another thing is B2B, B2C. So a lot of companies, again, just going a bit more content. A lot of entrepreneurs I talk to, they kind of start B2C. They realize they need a huge marketing budget and think, oh, let's do B2B. It's easier. It isn't. So the thing about B2B is that your customer is typically they're either more sophisticated because they're a bigger business. I've done B2B in a reasonably small company where I've sold into huge telcos and huge technology companies where they've got a procurement department where literally there are more people from the procurement department in the meeting than we have in the whole company. So you've got to think about B2B now. B2B can range from, it can be again digital, zero. Most of their sales is digital, B2B, isn't it?
Yeah.
Or it can be B2B, which you need to send somebody around there in a decent looking car that your client might see in the car park to sell to them. And that, if you're doing that, that's when you get into really understanding sales. And if you're selling B2B digitally, then yes, you need to understand SEO, digital marketing, conversion, your ratios and how that works, and perfecting your sales funnel. That's great. If you've got people selling, you need to become a reasonably good expert in actual sales. And sales is probably the only key important profession that you probably can't get a degree in, which still amazes me, because selling is a skill that can be learned.
Yeah.
You haven't got people that know how to sell, and that includes yourself, actually. Now, in smaller companies, the founders usually are the best people to sell a product or service.
Yeah.
Up to a point. They might not be the best people to close it and do the commercials, but they can sell the dream and get that customer sort of, into the right frame of mind. You might need someone to understand how to close to go in and shut that deal down. So depends what your B2B is, but I'm just telling you that it's not easy than B2C. And if you're involving people selling, invest in understanding and hiring salespeople. And the danger of salespeople is they're very good at selling stuff to you, including themselves. So
I like it.
All you have to do in sales, I think, is have you've got an employment contract, but you've got a contract. So you're going to say, come in, here's my product and service, here's a target audience, that's what resource I can give you, marketing, whatever it might be, people, whatever, expense account, whatever it takes. I can give you all of that. Do you think you can deliver these numbers? And they say, yeah, I think I can. So as long as you deliver your side of the bargain, they should deliver their side of the bargain. And if they don't, you've got to manage them really, really closely. And if they continue not to, change them. And in any small company, this is any employment, any role actually, it can be painful thinking about changing people. It's just spent 3 months hiring them, they've come in, I can see in the probation period it's not going to work out. I'm really busy, I don't want to go through the whole process again. I'm sure they'll change, I'm sure they'll improve, blah, blah, blah. I'll take them out for dinner, we'll have that chat. In your heart of hearts, you kind of know that's not going to be the case. So you've got to have a revolving door and be willing to go through that process and actually make your recruitment and onboarding and your sort of probation process as slick and efficient as possible, so that as that revolving door starts to slow as you build your business, you end up with a great team, but you are going to kiss a few frogs on the way.
Indeed. You've got a few of those in the cupboard.
Yeah.
Chris asks Piers, what podcasts do you listen to?
Oh, Alex Chisnell, he's a good one.
Hey.
I tell you what, they differ. So I've dipped into all the way from your Joe Rogans, the sort of the very specific business podcasts, technology ones, and I kind of get bored of them after a while. I think a lot of them they sort of seem to lose track, a bit like people's YouTube channels. They kind of can't remember, they can't work out what to do next.
Yeah,
I kind of dip in and out. I'm sort of more into the Audible books in the minute, actually. Listening to books. I find it hard to find time or the focus to read them. But if I could get on my Peloton bike or my real bike and listen to a book while I'm in the car driving around in circles these days, I find that a good use of time. I think that Blinkist as well, where they do abbreviated books. Although Amazon's now doing abbreviated versions of books. And let's face it, you read a book like that, you only remember 5% of it. Couple of phrases and thoughts from that. So if you can find the right ones and extract them, that's a very efficient use of time. I find that podcasts can be, quite time consuming.
Yeah, I mean, it's I struggle with the audiobooks just because I want to write stuff down, and it's normally like you say, I'm out running or I'm driving in the car, and I literally want to write something down.
Visualize it. You got to.
I struggle with that. I struggle with vision.
Yeah, I'm very visual, me. So I wave my hands around all the time. I'm always drawing stuff in the air. So I'm very visual. I kind of visualize. Oh, yeah, that's an interesting point, actually. And then I try and tag it on something else that I know, and then you don't forget it. Then just based in mnemonics.
That's why you'd be good in Ibiza.
Yeah, exactly. I've plenty of practice of that. I'm from the Manchester days. I remember the hacienda.
Great institution. OJ, how do we win the 30-minute session with Piers? Gosh, I really hope I win. Everybody is entered if you are here. Everybody who has registered for the Festival of Startups. I'm literally just reading it from the WhatsApp group. We're here. Hacienda, says Kasim, not heard of that in over a decade. Indeed. Tony, what was his name? Tony Factory Records, wasn't it? Yeah.
He died. He was Mr. Manchester. I was a bit young for Hacienda. I was just a little bit too young for it. I got the tail end of it. I was definitely a bit of practice on that front.
Yeah, Sarah says, OJ, you'll be entered by attending, so you are in, and that goes the same for everybody. Astrid, yeah, this is a good question. We've had this come up today with our VC and with investment from Angel. How is a solo founder viewed by angels? Does it hold back investment in those startups for an MVP that is profitable?
I don't get this thing. I mean, I know I went to we went to Antler.
Yes.
And if anyone from Antler's listening, I might get this wrong, but it's a bit like a Y Combinator sort of model. And it was very interesting, wasn't it? Because they basically put people together that they hadn't even started a business yet. They just think that they might start a business. A lot of them actually club together and find a co-founder. And I think that I've started businesses on myself, kind of doing it now, and with business partners. And I think that, but I don't believe in this. You should go and get a co-founder because it's a good thing, to share the burden. Yeah. At the end of the day, if you're the founder and it's your idea, you've taken all the risk, and you're the one that started it up. Yes, you can bring people on board. Now, what you call them can be an interesting conversation. Are they are they your CMO, or are they a co-founder and CMO as well? So I don't really worry about that too much. I think it kind of is what it is. I think if you want to start a business, then there's so say you see a market that you can see a real opportunity, but you really don't have the technical know-how to go and actually explain that or write a business plan or financial model and sell it in, then you're clearly going to have to go and augment your capability with somebody else understands that market. And they probably are going to be a co-founder. But I wouldn't get hung up on it. I don't think people, I've never come across somewhere I thought someone's walked in, I said, oh, hello, where's your co-founder?
Yeah.
It's a thing like that. You might say to them, yeah, I get it, but you're going to need some help. And you bring people in. What you call them, I'm not really bothered about. I think the team, the opportunity, and the way in which they're going to go about executing will tell the story as to whether that's a fully baked team or not. I wouldn't worry about just going out finding co-founders for the sake of it, because finding somebody that you're actually going to spend potentially the next 5 or 10 years with in some very difficult times, some very stressful times, is not easy. And something I always say, and kind of I'm selling my course, well, I kind of am, but something I say in my course is this. I've learned this the hard way. Do not start your business and say, right, what I need is someone that can do a financial model, someone that understands a bit about marketing, and someone that can run Facebook ad campaigns. And you look around you and you're like, oh, well, my ex-boyfriend, he's kind of reasonably friendly. He knows a bit about Facebook. My next door neighbor has lost a job in marketing. She can help with marketing strategy. And my dog walker's dad, actually, I think he's an accountant. You just don't start businesses like that. And especially don't start handing out shares and options to people like that, because what you're going to find is very quickly, if you progress, is that those people, they can't commit anyway. They're not the right people. They haven't got the right skill set. And you've now handed over, 25% of your company because they said to you, well, you can't pay me. I need some equity. So be really, really careful about how you put your initial team together, and especially how you incentivize them with anything other than cash.
You can see the sun is moving around where I am. I'm now getting like full
we haven't got that. We haven't got any of that, I'm afraid.
Is there any of that in Preston?
West is raining sideways over the minute, I think.
Is it? Oh no, it's glorious down here in Poole.
Today was okay, actually. I was out and about.
I've got a million more questions that have literally just come in. Wow. Okay, let's go. What is your process for protecting your business ideas when seeking investment?
That's a good one, that. So, firstly, you want to make sure it's something worth protecting. I've come across people where I've sat in front of them and then they sort of say, well, I've got this technology, and I won't mention what it was, because it might become apparent, but I've got this idea or technology, let's call it technology, and it's fantastic, I think it's great, it's going to change the world, and I've protected it, and I've got a global patent, and I'm ready to go to market, and because I've got a patent, that means that obviously it's something new and unique and it's got value.
Yeah.
And you look at it and you think, no, you just wasted 50 grand. And I remember saying to this person, where did you get the 50 grand from? I think it was 50k actually, pounds sterling, which is a lot of money. Where did you get 50 grand from? And then basically remortgage their house.
Yeah.
Now, I hope that I'm wrong and I read in 5 years' time that became something great. But that is a case study potentially in how to just, put £50,000 in a suitcase and set fire to it.
Yeah.
So the first thing, and the point I'm making is, you need to sort of test and kind of make sure that your idea is novel and is more than just a patent. If you want to go to market and make money out of it, that you can actually commercialize it. That's the key thing. And then if you think you can commercialize it, then insofar as you are able to, absolutely 100% protect it. Understand how you protect things like, trademarks, copyrighting is free. People don't understand that sometimes. Trademarks reasonably expensive, how much money you've got. When you get into patents and designs, and understand the difference between patents and designs, and you need to understand what it is. And if you don't understand, there's lots of resources out there. I think the British Library has got a great IP sort of a program as well. So go out there and find out what it is you need to know about protecting your idea. But even then, sometimes you can't afford to. And even then, I think that I'm an ex-lawyer, so there's one side. There's one side of me saying you're a lawyer, protect it. Don't go out there and say anything. But use NDAs. Use things like that where you might not actually be able to enforce them, but at least you've got the option to. So try and protect it as much as you can using NDAs or any kind of piece of paper you possibly can. But at the end of the day, sometimes just doing it is your best barrier to entry.
Yeah, exactly.
You think about software, you think about code. Let's face it, most businesses now are software driven. You could write Facebook tomorrow, nothing they can do about it. There's some stuff in there they could probably come at you for, that they would argue they invented and it's novel. But most businesses these days, you could look at it, and if you've got the right skill set, you could code something very, very similar. And unless you literally copy their code, which is copyrighted, it's copyright protection, you can recreate businesses. I mean, you look at Reels and Instagram. That's what all they do is look at the competition, try and copy it. If they can't copy it, then they go and buy it.
Yeah, so LinkedIn adding stories, isn't it? Just nicking that from them.
They're all just doing the same thing. It's all meshing together into one awful user interface, to be quite frank.
It is horrible, isn't it?
That's what you're looking at. And I think that if you've got something which is very much, it's your PhD, and it really is novel, and it is something new, something which is, pushing the boundaries, then, go through that process. Try and test it. Can you commercialize it? Is there a market for it? Can you make money out of this? If so, then the reward potentially covers the risk of you starting to invest money in it, whether that's to commercialize it or protect it. Use whatever you can out there, copyright, NDAs, just to give you some kind of negotiating position. But essentially, I still don't think that if you can't protect it, you shouldn't do it. I think you should still do it.
Yeah. Got a bunch of questions. This won't surprise you, I'm sure. Got a bunch of questions from people saying, how do I pitch to you, are you available for a Zoom drinks? Another one, are you available for a few drinks after lockdown to pick your brains? Can I present my elevator pitch to you? I know you get this kind of stuff. Even in toilets, I remember you telling me before, at a urinal. So I'll let you.
So basically, I created my course. We're doing another talk in this, aren't we, Alex? I won't go about too much. But I created that because I get asked all the time for advice, right? And I just couldn't scale it up. If I spend, and so I'm not saying I'm too nice, but I can help myself sometimes. I'll get into conversation on LinkedIn or somewhere with somebody, and I'll offer some advice. If I do that 5 times a day, 5 days, 7 days a week, so a lot of my day is gone, because then then you get into a conversation. So not that I don't want to do it, it's not practical. So I created the course basically to have those conversations. That it's basically me like this, talking to you just like this about every single facet of starting, building, scaling a business. And that's what I kind of created that for. It took me 9 months to make it. So that's kind of what that is. In terms of investment pitches, I'm very focused right now on businesses that I've kind of started. So a lot of my energy, my sort of headspace, even capital, even is going into those. So that's what I'm kind of focused on. I've got involved in a few things, but it tends to be people that I know. So I'm not really looking in a minute to invest externally. I'm kind of quite focused on my own ventures. Because at the end of the day, I want to do something big, scalable, disruptive, and something in this space. And it's working out what that is. I think I have. It's a question of execution. So I'm pretty busy on that front.
Roblox.
Say no more.
Say no more, exactly.
Yeah.
Okay, so OJ, where can I purchase the course? Please send a link. Okay, we've put the links up in here already, OJ. But,
your startup.
Yeah, we've posted them up. I've just asked the team to repost them as well, as people sweep. There you go. Sarah's posted them up again, right there, OJ. And that's the same for everybody else. And this will stay up on the replays. Again, we are getting the replays back from Airmeet, and we will let you know where we're going to post all the replays, because obviously if you get any value from any of these webinars, we'd love you to share them with other people, because they could still come and watch them. So I think we're looking at website, we're looking at YouTube channel, and seeing which is the quickest way to get them up. So thank you. Chris has posted up a better link. Okay, very good. Andy Frankson says, not all heroes wear black capes, just black branded hoodies. Thanks, Piers.
That's why I get handed parcels when I turn up at meetings. Turn up in hoodies, basically.
Alex like Natty. I like that one. It's got an A on it for Alex as well. I like that. Yeah, it probably says Atherton on the back though, doesn't it?
Yeah, it's Atherton.
Ah, there you go. See, it wouldn't work. Right, look.
I could just do the Superman, but
it literally has the Superman thing going on.
Branded, yeah.
Sure, you got a baseball cap with that on as well.
I haven't got one yet. I'm working on that.
Man, get the merch. They must have got that with the crowdfunding campaign. Did not get merch?
Baseball cap. I think I want to get a flex fit one, because I wear them all the time. So I keep talking to the CEO Dan about get me a baseball cap, but he hasn't quite given in yet.
All right, come on, Dan. Need more merch, especially the crowdfunding campaign. You're going to be inundated off the back of that. How many investors did you say? It was like ridiculous amount of investors.
Up to like nearly 2,500.
Yeah, that's
amazing. I mean,
create a big fan club.
Yeah, I mean, it's all right saying, "Oh, crowdfunding." Let's just stop for a minute, right? So you can now, go onto a website and invest and get EAS. And we start at £11.43 for 3 shares. I mean, that has completely democratized access to capital, both for entrepreneurs, but also people that want to get access to that kind of investment and that potential return. There's risk to it, obviously. It's changed the game. I mean, it is a fundamental shift in how we finance businesses.
Yeah, and I wonder what is going to happen with that merger, because there are other players in the space, clearly, aren't there? There's a whole bunch of other crowdfunding platforms.
Yeah, I think I mean, I don't know the details, right? But I think if you add up crowdfunding seeders, it's still a very small part of the market.
Right.
But it on paper at least, not that I'm involved in it, it makes sense for those two to just beat each other up, and I guess that there's a cost there and that friction where you don't need to have that in the market.
Yeah.
and they've got slightly different sort of focuses, but the access to that capital, I think, I look at the companies on there and the ones that are overfunded. It's fascinating. It's a game changer. How long may it continue? Because prior to that, and also let's just say angel investors, whether it's there's a guy today we talked about put £100,000 in. There's people put £11.43 in. Those people actually are keeping the economy and small businesses going.
Yeah, absolutely. Look, we've ran over as always, so we will draw matters to a close now. I can hear my kids piling in the front door as well, and given that we're all working from home. What you got planned for the rest of the week then? What are you up to? What's your focus?
Working on the business we talked about, and we're going to try and close out Atherton bikes as well. So we're kind of bumping up to kind of where we want to stop, really.
Yeah.
So work out how that happens and how we do that, and then the rest of the weekend. I tend to work all hours really.
Yeah.
I'm focusing on my small business.
Yeah. And Atherton bikes. Christmas is coming. Big time of year to be buying bikes, isn't it?
Yeah, I mean, we're looking at
cheap bikes,
kids' bikes, e-bikes, so the range will continue. But I mean, I've got one. I'm biased though, but I love it. I can't wait to get out on it. But we had a few weeks where I went out and it crashed, and I still can't feel the ends of my fingers from the nerve. So that's the problem with it. But I'm looking forward. I'm looking at getting a van actually. Like a pimped up van.
Oh, can you chuck it?
So you can take a bike and I can just drive around the country meeting small businesses and startups and just live in my van.
Yeah, I like it.
That's where my life's going.
And on that note, we'll sign off.
Okay, cheers everyone.
Brilliant.
Cheers, Alex.
Thanks everyone. So I posted up the link there in the questions and the link in the chat, scaleyourstartup.co.uk. And everybody is entered into the competition. We will pick a winner during these 2 weeks. And Piers, if we haven't got your question answered, I do apologise. We are back again. Remind me, it's the 26th, isn't it? Yeah. So Piers will be back. So if you didn't get your question answered, and we've literally been inundated, I have to say. So we are back 4 p.m. on the 26th of November, which is week today, as we draw things to a close here at the Festival of Startups. So come and join us again, and we'll get your question answered. I promise.
It's been a great event. Very impressed with it. It's Paul and the team, you Alex, just pulled this off.
I know, with only 6 weeks' notice, I think. So it's yeah, I'm surprised myself.
And that again, I said it I did a little video for you, didn't I? That again is testament to the Festival Enterprise pivoting. Because let's face it, it was physical events, for God's sake.
Yeah.
So I mean, look at this. I mean, that's entrepreneurs doing what they do. Fantastic.
It is. Thank you very much indeed. Appreciate it once again. Exit button is bottom right-hand side. You see a little door. And we will see you all again soon. Thank you, everybody. Networking will continue. Thank you, Piers.